Welcome to Governance Minutes, brought to you by the Society of Corporate Secretaries and Governance Professionals, and Knowledge Partner host, Corporate Board Member.
Welcome to today's show. My name is Ken Bertsch, and I'm here today with Tim Smith, who is at Walden Asset Management. He's a longtime shareholder proponent. He's been at Walden since the year 2000, and for a good number of years before that had been at the Interfaith Center on Corporate Responsibility. And we're really pleased to have you. We're pretty much near the end of the proxy season, a few more big meetings to come. But we wanted to get a bit of a recap from you on the season and what you see as the major issues.
Well, it's been a fascinating proxy season, but behind that, of course, is the hundreds and thousands of engagements with companies that you don't read about in the papers, where companies and investors are talking to each other on everything from executive compensation to governance to environmental issues. But some of the key issues this year that have actually got to the proxy or been debated at stockholders meetings, of course, the ubiquitous say on pay vote that every company must have. But I think as a very active proponent of say and pay, as an investor, that we can be pleased that this is a very important platform for stockholders to engage companies and hold them accountable when they're necessary, but give them a warm round of applause if they're doing the job right and building pay that is linked to performance. So we think that even though there's not a lot of no votes, over 50% no votes, that doesn't matter. It's still a platform that works. Secondly, on governance issues, it's been fascinating to watch a trend now as the votes on annual election of directors just jump into the 70s and 80% votes. So that not only have numerous companies stepped up and said, we'll make that reform, but when there's a vote, it's an overwhelming vote of support for that. And it feels to me that compared to 10 years ago, this is now a governance reform that is just accepted by the investor community as what's needed in good governance. Another issue that sort of overlaps between governance and social concerns would be political spending and lobbying. Right. And because of this year being an election year and because of the Supreme Court Citizens United decision, we see a lot of attention to the whole question of company dollars being spent in the election process, or even company dollars being spent to try to affect legislation like the Volcker rule, for example. So the hot spotlight of public attention is really on how companies are doing this, and for some, even whether they should do it at all. But we're seeing disclosure resolutions on political spending, a number of them getting in the 30 to 40, close to 50% range, and lobbying resolutions, a number of them also getting up there in the 30s, as companies are being called just to be transparent about this. And on political spending, the fascinating thing is the Supreme Court, 8-1 in its opinion, argued that there should be total transparency, that if companies were allowed to contribute, they should be required to disclose it. So that's an issue that's both very prominent, very visible. There's stories every week in the papers about whether it's super PACs or whether it's political spending. And then you have a whole range of issues on the environment, for example, exceedingly important. And on an issue like fracking, which is an issue we probably didn't know how to talk about 5 years ago, very quickly both investors and companies know that you need to move to the highest standards if you're going to defend fracking. Yeah.
Well, so you've been doing this a long time on a range of issues, including political contributions? Is that one of your?
Yeah.
So do you, over a long period, do you see the patterns of engagement changing, or is it pretty much the same as it has been? How responsive are companies, and how responsive are you when you hear things from companies?
I think both investors, in the main, we're generalizing here, right? And companies are more willing to engage each other and talk about issues like executive comp again, where it's in companies' interest to have their investors listen to their story on comp. But we're finding, many of the companies that we deal with, even before you consider filing a resolution, you have a conversation, maybe it's on the phone, and you come to an agreement. And oftentimes, we've been fortunate if you file a resolution to make a point, or your letter was never responded to 3 times, and you file a resolution to make a point, we're often able to come to an agreement. About 50% of our resolutions are withdrawn.
Really? Wow.
And we seek that. That's a win-win. And it's not that we won as proponents. It's that the company moved forward on the issue. They're more transparent, or they changed a policy, and we commend them for that.
Right, okay. It seems as if there's been less press attention on environmental resolutions, but has that been as active as ever? Is it just overshadowed by political
It
contributions?
has indeed. And the press attention is more on the issue often, on the issue of fracking, a lot of press attention.
Right.
On the issue of oil sands often gets covered, and climate goes up and down as an issue that gets covered too.
Right.
So in fact, investors are, with literally trillions and trillions of dollars of assets under management, are petitioning companies both to be transparent, but also to up their game in terms of reducing greenhouse gas emissions.
Right.
So I would say that probably what the press covers isn't the key indicator of whether an issue is important. On an issue like that, probably there's stronger and deeper investor support, because investors understand the risk that comes with climate change, as do many companies, of course, too.
Right. So what should corporate secretaries be thinking about? It's a little early to be focused maybe on 2013, but it's really not. I think a lot of the activity really takes place outside of the season. In the season, there's a set of things that happens, but maybe the fall is actually more important for dialogue. And,
yes, I think in a way the proxy season is an artificial snapshot of what's happening, because really this summer we'll be engaged in numerous dialogues with companies. I'll give you another example. It's very hot right now. Company contributions to this group, the American Legislative Exchange Council, and a group called the Heartland Institute, which is a climate denying group. And companies, I think, who made contributions to both or were members didn't do it because they believed in the total political package these groups had, but they joined for a very specific reason.
Right.
But they now are being tarnished with the brush of groups that are highly controversial, and it's hurting their reputation. We're going to be writing companies to ask them to review this this set of contributions and what their impact is, and whether it really reflects the company's values. If it does, it's one thing. But for many companies, they'd say, this is appalling. One group, the Heartland Institute, had a billboard in Chicago with the Unabomber's picture on it and said, I believe in climate change. Do you? And it was a shock bulletin board to make the point that people from Osama bin Laden to the Unabomber, because they had those pictures coming up, were believers in climate change. Well, it was over the top, and many companies immediately, within 24 hours, headed to the exit.
well, so is that issue going to be as hot next year after the election, do you think?
It will, and for a couple of reasons. One, this is part of the unbundling of how companies are spending corporate dollars, investor dollars, to give money to think tanks or to put money into lobbying activities in political activity. I think this is a genie that's not going to be put back in the bottle. So it's not just the election. It's how are our company dollars being put to work in the political sphere.
Okay. Just wanted to switch gears a little bit and talk about what's happening at annual meetings. And one topic of particular interest to a lot of our members are virtual annual meetings and online participation, and there's which is not a lot of right now.
Right.
But what are the prospects for that? I know you've been involved in a group that's looked at that and looked at what the standard should be.
Right.
And could you talk about that a little bit?
Yeah, I think it's awfully important both to look at the pros and cons of having a virtual only meeting, meaning a shareholder can't attend a physical meeting but is just online. I think most investors are not going to be in favor. CII, for example, the Council of Institutional Investors, opposes virtual only meetings. What happens if there is a scandal or a huge problem or a problem with the CEO, and suddenly you have no ability to go to a meeting to talk to the directors or raise an issue or vote? I think it's probably poor form to go to a virtual only meeting. I do understand for companies who have virtually nobody coming to their meeting,
which
that
is
it's
actually the large majority.
A large majority
meetings.
of mid and small sized companies. That there's some logic to it. But my own sense is the best practice would be to have a small meeting that anybody could come to, make it virtual, cost minimal, and make sure you broaden your base out to your shareholders that way. And then make sure you have best practices for how to share owners actually line up, ask a question, participate virtually too.
Okay.
I think that's where most investors would come out. I know some companies would like to see it as an experiment of just virtual-only meetings.
And are there some good guidelines about how to? You could have different protocols. So
Yes.
what's the best standard for setting up the protocol for participation?
You know, there's no one best way to do it, but there's some standards or principles. Obviously, you don't want to have a virtual meeting being something that behind the scenes the company's manipulating who can speak, ask a question, or speak to a resolution.
Right.
So there will be protocols coming out in a couple of places about how that's done best. Okay. I think that's in everybody's interest, proponents, investors, companies alike.
It does seem like it has the potential for expanding participation in meetings, given
does.
that we're a big country and physical location is a limiting factor for many.
And we're in a new era. We're in the electronic era. We should allow people to participate. I know people for years have participated on a webinar listening to an annual meeting, but you couldn't vote, I think, that way. And this new set of tools allows you to vote at the meeting electronically.
And allows participation otherwise as well. Yeah.
There's an interesting addition to that, though, is an expanded conversation of how do investors and companies engage in a more thoughtful, broad-based way. And for example, just the idea of setting up an electronic bulletin board the month before the meeting where people could have discussions or ask questions and get answers even before the meeting. So it isn't just related to the meeting, it's related to the broader question of communication.
Okay, good. You know, we have a little bit more time, and maybe I can throw a left field question. Years ago, I had talked with you quite a lot about Burma, Myanmar, where there have been issues for years and years, and there's been a lot of change, or maybe change this year. But it's a long time. And some people said the sanctions and some of the efforts of activists were holding things back for a while. You know, there were various debates. I wonder if you know, the long picture on Burma. Can you comment at all on shareholder activism and that issue?
Yeah, I think actually there's always a debate about whether sanctions did a job, whether it was in South Africa, Sudan, or Burma. I think it's interesting to watch the leader in the opposition, Aung San Suu Kyi, was a great fan of pressures on the government and ways not to embrace them, but either economically or politically. So she, I think, all along had been, while the government was recalcitrant, was a supporter of keeping the pressure on. And now she quite rightly, as the U.S. government has too, has stepped back and said, well, let's try to provide incentives to the government as it changes, support it in its changes. So you've seen now that U.S. companies are actually being encouraged to look at ways to adopt best practices to invest in Burma.
Right. Okay. Well, that's good. Well, thanks very much. It's great having you on. And
nice to see you all.
We love talking with you. Thank you. Thanks, Tim.
Thanks again.
And so we'll be back in another month with another program. Thank you.
Join us again next time for Governance Minutes, brought to you by the Society of Corporate Secretaries and Governance Professionals and Knowledge Partner host, Corporate Board Member.